I think that we're just at the tip of the iceberg, as you mentioned before. There is still a lot of stuff that can happen in marketplaces that has not been done. That doesn't mean that we have not seen a lot. Of course, there's been a lot of incredible, valuable businesses that have been built, but there is still a lot of stuff that can happen.
Welcome to Two-Sided, the Marketplace podcast, brought to you by ShareTribe.
Hello and welcome. I am Sjoerd, CMO at ShareTribe, and I am your host. Welcome to the first episode of Season 3 of Two-Sided, where in this season we'll interview marketplace investors to discover what they think makes a marketplace successful, what they look for in marketplaces, and how investors see the future of online two-sided platforms. We're kicking off this season with a true heavy hitter in the world of marketplaces. I'm talking today to Jose Marin, co-founder and partner of FJ Labs, a very well-known fund, the number one marketplace angel investor in the world. I would say both in quality as well as quantity. At the moment of recording this intro, I checked out the website and they have 1,131 startups in their portfolio. For example, Airbnb, Alibaba, AngelList, and if you're paying attention, you realize that, those are only the most known ones starting with the letter A. I truly don't want to waste your time and go through the entire alphabet, but it is an incredibly impressive portfolio. We have a great conversation to get to. And in this conversation, you'll hear Jose share how FJ Labs has built its unique investment approach together with his partner Fabrice Grinda, how they focus on their high quality deal flow and utilize their vertical expertise. We also discuss some of the emerging trends in marketplaces that they're seeing in their portfolio, such as B2B digitalization and cross-border commerce. And finally, he has some really valuable advice for early-stage founders. I'd say, let's just get to it. So here's my conversation with Jose Marin of FJ Labs. Hi, Jose. Welcome to the show.
Great pleasure to be here with you guys. Thank you for having me.
I really appreciate you coming here. I mentioned this already to you, but I've been attending the Marketplace Conference in the last couple of years. You always gave the closing keynote, which has always been super insightful. And anyway, like being in this space, FJ Labs is very well known. But before we dive into all of this, could you tell the audience a little bit about who you are and how what did you do before you became a marketplace investor?
I've always been passionate about technology. I actually grew up pretty much everywhere. And I went to Stanford very young. I did 2 master's degrees there. And while I was at Stanford, I was very interested by technology. And actually, frankly, as an engineer, before always had the dream and the idea of building something. And actually being at Stanford helped me get acquainted with, a lot of the tech businesses there and frankly, a lot of the investors, which was an amazing not that planned step, but it turned out to be very good. After the GSV, I started my first company. I've been a serial entrepreneur that has turned into an investor by chance. But I went on to build my first company right out of Stanford. And at that time, 24 years ago, there was nothing in Latin America. We were absolute pioneers and we launched a company that was building the eBay of Latin America at the time. It has evolved now and now it's more of an Amazon type of business for Latin America. But, we raised over $100 million for that. Today, everybody raises $100 million, but at that point in time, there was not even venture investors in the region. We raised capital from private equities. And we ended up having a very interesting battle with our competitor, that we ended up losing, but we still did very well. We had 30% of the market and we were profitable. We merged with our competitor and then they took on the business and brought it public. And, today is the largest company in Latin America in the tech space. It's called...
Is this OLX?
No, this is Mercado Libre.
Mercado Libre. Okay, yeah, okay.
Today is obviously Mercado Libre, and these guys have done a phenomenal job in scaling that business. But I'm proud to say that as an entrepreneur, we put our little grain of salt into building an absolutely transformational company. That's how we started. And in parallel to that, My business partner Fabrice gave me the technology, and Alec Oxenford and a group of friends to start DeRemate, which is the company I was talking about. No, and since then I know Fabrice. The relationship has been very, very interesting, and based very much on trust. We launched DeRemate out of his servers in Sophia Antipolis. He was building the eBay of France. And then after that, he went on and built a company called Zingy while we were still building DeRemate. And when he exited that, we went on to build a company that became the largest classified business in the world. The company is called OLX, and we sold that to Naspers some years ago. And in parallel to that, we actually experimented a number of other company builds. We built an online travel agency in Brazil, and we built a number of other things, including a mobile classified business in the US that eventually became Letgo and today is OfferUp. So, very, very strong entrepreneurial heart, and frankly, always very motivated by the power of technology in making the life of people better. No? And that's really what inspires a lot of what I do. I like to think that the world is becoming better and better, which actually is. And I really think technology can play an absolute role in making sure that people have access to better products, better services, and better lives. No? And I think that's probably the biggest inspiration.
I knew about the OLX. I had missed the other part. From the sounds of it, it sounds like it's always been both you and Fabrice have always been like around classified two-sided platforms in one form or another. Am I assuming that right?
Yeah, you are assuming this completely right. I mean, we've always been passionate about the power of marketplaces, and we actually have been doing this for a long time, and we like to think that we know what we are doing, both on the building side and operational side, and also on the investing side. No, we certainly have been very, very exposed to trends, and we like marketplaces. What I can say is that it was a very unexpected situation becoming an investor, no, and by the fact of being a very exposed people to marketplace areas, a lot of people started to come while we were still running our businesses. People coming to us and say, "Hey guys, we want you to invest. We want you to be part of our story. We want your expertise." And then, little by little, we started to invest our own capital, and more with the idea of learning, doing something that we like, being close to the market. And the truth is that we ended up realizing that we had incredible deal flow and that we were making incredible returns. So then we said, we should probably be more aggressive. Then we became more aggressive with our own capital, up to the point where, Fabrice and I said, hey, why we don't create a holding company that let us do what we like? And that's really the genesis of FJ Labs. We didn't start at FJ Labs thinking, we're going to be a fund manager and we're going to raise capital from people. It was more like, hey, let's have a holding company that let us invest and let us capitalize on, incredible deal flow. And frankly, doing something that we really like and we enjoy. And then realize that the opportunity was significantly bigger, than what we initially thought.
Yeah, could you tell a little bit about the deal flow? Because it's not like the goal of my interview is always to uncapture a little bit like what is your marketplace knowledge. But I think FJ Labs is such a sort of special beast because I think the tagline is the world's angel investing adventure scale, because I think you have an incredible portfolio, and I think you mentioned something like 200 plus memos per week, or maybe that's an outdated number.
No, that's very dated.
Yeah, and I'm bringing this up not because let's see how, let's look how much money this fund has or how much it's doing, but because you're so specific, it's actually a rather relevant number. So could you tell a little bit about your deal flow and how you do that? Yeah.
Let me finalize the story of how everything comes together for us becoming a fund. And then I will say how the strategy works and how we have evolved. Because as I was saying before, we started investing our own capital, and we have a lot of our personal net worth, invested into FJ, several hundreds of millions of dollars. And also, so we didn't envision that we were going to be raising capital from anyone at the beginning. This is the truth.
Yeah.
But then we realized that we were actually not rich enough to be able to take advantage of the opportunity only with our own capital. And very gratefully, we had, Telenor that has been a very active investor through the years in marketplaces, approached us and said, "Hey guys, we want to do something together, and we want to learn from you, and we want to participate in the upside, and we want to work together." That was obviously very flattering for me and for Fabrice, and also an opportunity to say, "Hey, okay, let's test how it works." Investing capital from third parties together with our own money. And that's how we raised our first $50 million fund. Eventually realized that if we wanted to continue to scale, it was good to have other investors. And we started by contacting people that we know throughout the years, people with whom we have very tight relationships, frankly, in a lot of cases, friends, and very quickly moved and raised a $175 million second fund, mostly made with, people that, that we know well, and that in a certain way we have trust, no? A very, very small hand-picked pool of people. And most recently, our last fund, we raised $292 million, and that was, again, with a similar thesis, no? With people that can think long-term, people that we can build relationships and can grow with us. Little by little, we've been, scaling with a, I would say, relatively small, comparatively, base of LPs, no? So now we have an incredible setup. We are again running an organization. Fabrice and I feel that we're running a business again. It happens to be a business that invests capital, no, but we manage already a significant amount of assets from third parties together with our money, no. So and now some of the biggest questions and challenges we have is how do we continue to build a firm? No, we have a strategy that works. We have an amazing team. We have two other partners. We have a process and a structure. And now, the big question is how do we continue to think into the future? How do we continue to create the right incentives, to make sure that we retain and attract the right people? And how do we make sure that our investors come in and invest in FJ Labs with Fabrice and Jose versus investing in Fabrice and Jose? And that's the point where we are today. We're going to go back out to the market early next year to raise our next fund. We are very excited with the results and frankly, the continuity and the place where we are.
Yeah.
So that kind of brings together the story of, my background together with becoming an investor. No? Now, going back to your question on deal flow and how we are different. The key to what we do, well, what's the back? Frankly, I don't think if we would not have deployed, north of $150 million of our own capital, we would have been able to raise the capital that we raised, because what we do is very different. We don't necessarily follow the same strategy that a lot of other venture funds follow. And the key to that is that we don't lead rounds and we don't join boards. So pretty much everyone else in the market, smaller investors, bigger investors, people from previous companies that we have backed, all of them, they say, we want to bring these people on board. Why? Because especially for other investors, these guys are not competitors. No, these guys are a complement into the round. When we, let's say, when they write a check, of $7, $8, $9 million, which is the average Series A in the US, and we come in with 500K, in their eyes, he's like, well, these guys are really not moving the needle, and they're bringing vertical expertise. No, so that's the reason why we generate over 200 deals inbound per week. No, so that's actually incredibly differentiated from a lot of other investors. No, because we don't have to go out to the market and reach out to people because we want to invest in their businesses. They actually come to us.
Yeah.
And in a lot of cases, they come to us because of the fact that we don't step on the feet of other investors and they see us as a complement, no? And when you think specifically about the deal flow, how can we have such an incredible deal flow? I mean, it comes from three places. About 1/3 of the deals we get come from other investors. Now, about 50% of the deals we invest in come from other investors. So this already gives you an answer of why, it's so important to be a complement to the round versus being a competitor to the round. Now, we have built a network effect business ourselves as well, because, the more investments we have, the more founders and more teams within founding businesses, eventually come back to us with new projects. So that's the second source of deal flow. We have backed over 1,000 people and 1,000 companies with other members that them on its own eventually build new companies. So we get amazing deals. And the third part of it is just people that continue to come to us directly, people that know that we understand marketplaces and that we have been operative in marketplaces space for a very long time. So that's how all of that comes together. So when you put together an incredible type of deal flow, because we have a differentiated strategy and we don't step on the feet of others, together with an operational capacity to systematically process 200 deals per week, and you bring in the vertical expertise and know-how that we have in network effect businesses, that's what gives you the arbitrage. No?
Yeah, that's the part I was sort of hinting at, that I think it's just incredible that basically you've built your own network in like network effects based deal flow, which is like, I'm not an expert, but I haven't seen that anywhere else. And it's so nicely tied into the field that you invest in that I thought that is like worth bringing up. You have this deal flow, and I mean, I can hear the Stanford engineer behind what you're saying, that like we need the systematic approach. Like I feel that this is also maybe one of the differentiator. I think I read somewhere that Fabrice is still taking cold inbound on LinkedIn, etc. So like you never, I think where other funds sometimes put up some what feels like an unnecessary layer of associates and processing, that it feels very like systematic for you. But then once a deal comes in, like, could you maybe tell a little bit, especially for pre-seed, like very early product, maybe even pre-product marketplace? I don't actually know. Do you do those? How do you evaluate an opportunity? Like, what do you look for?
4 things that we really care about. And the first one is, do we like the founders? Now, everybody talk about, hey, do you like the founders? No, it's very easy to say, we like the founders or we don't like the founders. But what does that really mean?
Yeah.
What it means, the type of founders that we look for. We want to have people that are extremely good communicators, people that can sell the dream, not only to other investors, but also to their own team, so they can attract and retain amazing people. Second, we look for people that have analytical, structured minds.
Yeah.
We like to see entrepreneurs that think, how much money am I putting in, how much am I putting out, and how am I going to be making money out of this? That doesn't mean that amazing entrepreneurs cannot, make great businesses without necessarily having that structure at the beginning.
Yeah.
But we like to have that structure, and we like entrepreneurs that come back and say, hey, listen, these are my numbers, this is the margin, this is the money we put in, these are the unit economics. So we look for a certain analytical twist into those type of founders. And
Yeah.
most important to say, people that have passion, that they are doing something that they really like and that they really care about, and that they're doing it for the right reason, and in a certain way that they can be relentless.
Yeah.
So that's the first part. We need to like the founders. Then second, we need to like the business. Fabrice is very good in structuring information, and we have a lot of this in Fabrice's blog and also in the FJLab's website. But there's a number of criteria that we look into each one of those businesses that we analyze, that we like to explore. And examples are like the competitive dynamics. Can this business be a category killer? Do we have a first mover advantage? Is the market big enough? How is that market growing? So some of these things are just things that we specifically look and check into each one of the companies that we analyze. So when and that's the second bucket. The second bucket is that. The third bucket is the terms. Since we don't lead rounds and we don't join boards, we don't set the terms.
Yeah.
So we need to be comfortable with the structure of the deal and with the terms of the deal. If we don't like it, we just don't do it. We are not the type of investor that would go in there and say, hey, we need to change this, we need to change that. We don't do that. We are easygoing. We generally either like it and invest, or don't like it and don't invest. And to be very honest, we feel that this is actually not as relevant as many people think. And, especially as a small investor, at the end, what really matters is not necessarily the rights that you have, is the relationship that you have with entrepreneur. So, at the end, that doesn't mean we don't do the work. Of course we do the work. We care more about, the detailed relationship with entrepreneur rather than, specifically what specific right we get in the documents or not. No.
Yeah. And it's anyway hard to do at scale, I imagine. Like if you want to go terms, like if you invest as much and so often as you do, you can't be like engaged in a terms battle with every like that seems unscalable. Yeah.
Yeah, no, that's correct. And
Yeah.
and you know, and the fourth leg is we generally like to have a business that falls into our thesis, no? And that I don't say always, because sometimes we do things that are out of scope for us. Very small percentage of what we do is that, but we also like to do things that can potentially bring very high alpha.
Yeah.
But so long as if that doesn't go well, it wouldn't affect the returns, no? So that's why we still do things that are out of scope, but it's a very small percentage of what we do.
Yeah.
The rest, we much rather have things that fall into our thesis, no? And we will talk more about this after, no? Where we see opportunities and how do we think about places and the trends that we are seeing in marketplaces, no?
Maybe we can go into that actually. Like, what are opportunities and trends that you get excited about right now, or that you see that you have recently developed some deals in, for example?
Yes, I mean, there's a lot to say here, but on the first part, we've always been quite contrarian, no? We like to play our cards very differently than maybe a lot of the other people in the market, no? And not to say that people don't like B2B, but we are very bullish on the B2B digitalization, no? And that's something that we've been doing for a while, and despite some of the very big complexities in making some of these businesses work, we still believe there is massive opportunities, no? And being more specific, there's a number of trends, no? The marketplaces for inputs, no? A lot of large industries are still quite obsolete, and they need to be disrupted by using technology.
Yeah.
We have a number of examples of companies that have done a great job, in building marketplaces for inputs. There's a company for the chemicals sector called Node that is doing great. So that's one of the things we look in B2B. The second thing I would like to raise is, SMB enablement.
Yeah.
We've been seeing so many businesses that are trying to help SMBs, focus in doing what they really care about rather than having to focus on everything else. Couple of examples of that. There's a company called Slice, which is a platform that helps pizzerias do everything that is not cooking pizza, no?
Yeah.
And that's a very clear trend that we've been seeing, no? There's also a couple of other trends. We believe in, disruption of B2B labor marketplaces. Now, here, we don't like businesses that are just purely being based in arbitrage.
Yeah.
No, we like businesses that can add value into the value chain. And also we like verticalization. No, there's a couple of companies we're invested in. There's a company called Trusted Health, or a company called WorkRise, that are vertical plays in the B2B side, no, that fall right into our thesis. And there's also a very clear tendency that we're seeing with the moving out of China supply chain that is creating also a number of trends and opportunities in new geos.
Yeah.
To capitalize on infrastructure, no, and we've invested in a large number of companies as well that play infrastructure. There's a company called Flexport, or a company called Shipbob. I mean, of course, Stripe, but many other things that actually support the infrastructure for marketplaces to be built. And that's what we are seeing on the B2B. There's a number of other interesting things that are becoming a reality.
Yeah.
There's cross-border commerce. Since I started DeRemate, everybody was talking about cross-border commerce.
Yeah.
But it's only until recently that I think a lot of that is starting to happen. No? Companies in Europe actually have been pioneering a lot of this. Vinted is an amazing example. And I don't know if but we are very close to the Vinted CEO. Thomas worked with us for several years before, going to Vinted and making a change there. So we are very close to the business. I'm very happy to see how effective they are managing, these cross-border transactions, no?
Yeah, I think Vinted is such an amazing example, because this is like you, I haven't been as long in the marketplace game as you, but there have been a couple of these verticals that have been sort of plowing on forever, and never like somehow you feel that, okay, it must mature right now. And I think like vintage specifically has done like such an amazing job from just basically exploding over Europe, like taking over country by country and just really sort of solidifying this like vintage fashion marketplace or whatever you want to call that one. Yeah, I think it's an amazing example. So you have been with them from very early on.
Yeah. I mean, actually, no, the thing is, the story of Vinted is interesting because they started with a different business model. And then when Thomas, we were actually uh, in discussions with some of our friends in Insight, and they told us that they had a great company if we could take a look to it. And then, Thomas, who was at the time working with us in building a mobile marketplace, went there and met them and came back and said, this is an incredible opportunity, and then, he came up with a whole bunch of interesting ideas that we brainstormed with about how we could change the business model,
Yeah,
So yes, we were involved when he joined. That's when we got involved. But the interesting thing here, and I think there's a very big lesson here, which is how did these guys do it? These guys decided, to go free in France and to build volume and then start monetizing based on value-added services,
yeah,
which is a very different monetization strategy than just the advertising side of it. When you are making, the seller pay, no? So for value-added services, the take rate went up automatically, mainly from about 3-4% to 9%, which automatically made an incredible profitable margin, no? It's three times the margin straight to the bottom line, no? So that's what has been incredibly valuable of this story. But going back to the trend is we are seeing a lot of cross-border commerce, no? And there's another company we invested in that is called Ovoco. Ovoco is a marketplace for auto parts, and they've been doing also a lot of cross-border in Europe, no? They are growing very nicely. So cross-border is starting to become a reality. And that's one of the other trends I wanted to highlight. Then I mentioned some of this briefly, but there's a lot of changes in logistics infrastructure, that are powering this cross-border e-commerce.
yeah,
We've seen new players emerge. I don't know if you know a company called Queens, but these guys have been doing an amazing job by making the value chain. I mean, they are a consumer player, but they have built an incredible infrastructure that is asset light.
yeah.
And I think there is a number of other players that are trying to replicate this for cross-border. We recently invested in a company called Portless that is trying to do something like this. It's still very early to tell, but it is clearly a very important trend to be able to make more efficient cross-border asset-light infrastructure, no? Which is something that we are very excited about.
Yeah, thanks. Yeah, so if we take one step back, so let's say just the marketplace area in general, like I recall you when I was at the marketplace conference, you said that you're often asked like, aren't all marketplace ideas already done? Like, isn't is there still opportunity here? What do you say when someone asks you that?
I think that we are just at the tip of the iceberg, as you mentioned before. There is still a lot of stuff that can happen in marketplaces that has not been done. That doesn't mean that we have not seen a lot. Of course, there's been a lot of incredible, valuable businesses that have been built, but there is still a lot of stuff that can happen. We continue to be very, very surprised about the verticalization. Everybody says, no, every single vertical has been built. That's not necessarily true. And there's a lot of verticals that could be built, that maybe initially didn't seem to be interesting, that ended up or have ended up being very interesting, no? Like a company called River.
Yeah, I was going to ask you about this because I remember this from your. This is a great example. I've been mentioning this also because, of course, also for ShareTribe, like our company, we provide marketplace software for founders to start a marketplace. For us, it's also quite crucial that marketplace ideas are still feasible. And could you tell a little bit about how Refurb? I think this is actually a nice one to still lie out where people think a category didn't exist or that a big incumbent was already covering it. And then Reverb came along and did what exactly?
eBay. One of the verticals of eBay, of the many verticals of products of eBay, was musical instruments, out of which 80 or 90% of those were guitars. So, who could think that there could be an opportunity? That category was worth for eBay something around $1 billion at the time. So, who could think that there could be a bigger market to be unlocked by focusing on that specific vertical? And that's what River did. They focused on that specific vertical and grew the market into another $1 billion business in terms of GMV, and build a very profitable business that eventually got sold. No, so that's a perfect example that there's still opportunities in certain verticals that people don't think about, that could actually be very attractive. No? Going back to your question and to give a little bit more meat, I already talked about B2B, no, and I already talked about the fact that there's so many industries that are obsolete, and there's very different ways of playing that B2B side. So that's a huge opportunity why marketplaces are not over and they're just starting. And there's also a whole bunch of other things that we're seeing, no? As I mentioned, cross-border commerce, logistics, live commerce, and frankly, also new ways of attacking new categories, no? So there is still a lot of opportunity within the marketplace space on stuff that can be built on those trends.
Imagine I'm a founder and I listen to you tell me this, there's so much opportunity, and I have an idea, like what advice would you have for an early founder? Like what, based on, like you see like 200 companies per week, like.
Yeah, but I think a lot of the advice that we can provide comes from a lot of the mistakes that we have made. So let me.
But that's perfect,
Yeah.
right? Yeah.
So let me try to summarize. I mean, I think there's different segments where we can give advice, but initially, in validation of your idea and coming up with a right idea. I mean, get inspiration from personal pain points, and things that people would like to have solved that are not solved.
Yeah.
Also be thoughtful around geo arbitrage. Even though there's way less arbitrage today than when I started DeRemate, there is still a lot of opportunity to do arbitrage of businesses that work somewhere that could work somewhere else.
Yeah.
And frankly, these days, we're seeing much more innovation outside of the US, which means that you can get business models that are not in the US and bring them to the US. So, use that as part of the inspiration on the ideas, no? And then have a disciplined approach towards proving or disproving your hypothesis as you analyze and validate your idea.
Yeah.
Now, in terms of once you have the right idea, how do you think about, building your team? Be very, very thoughtful on how you choose your partners. When you are 2 or 3 people, if you make a mistake on your first hire, it has tremendous impact on your organization.
Yeah.
If you make a mistake when you are 100, 150, it has impact, but it's way less. So be very thoughtful of the way you think about the first people that you bring into the business. Be also very thoughtful about building the right culture, and the right incentives from the get-go. No, you want to make sure as an entrepreneur, at least we are, we want to make sure that people take risks, and that they know that it's okay to make mistakes, because the only way to find a solution is by providing an environment where you can take risks, no?
Yeah.
And don't grow too fast, too quickly. Let the business pull on you versus you preparing for something that might not come, no? So, feel yourself stretched. And that's from the perspective of the team. In terms of fundraising, I think it's important that people are thoughtful around how they choose their partners again. Talk to investors early, understand what are the differences of what they think, what type of things they want to see, and come up with your ideas and your plans and show investors that you have a vision, and then come back to the investor and say, hey, I told you that I was going to do this, I did it. That's something that goes very strong, with the investors, and for entrepreneurs that can do that is super valuable.
Yeah.
And then think about partners and not structure and price. A lot of people, we as entrepreneurs tend to think, no, I have to raise from whomever gives me the highest price.
Yeah.
And that's not necessarily the smartest decision always, no? Be thoughtful about structure, be thoughtful about who the partner is, and think about building a long-term relationship. In terms of execution, it is super important at the early stages of a business to experiment with pricing. Pricing is one of the most important things that you can inflect revenue. You not always know how you have to price or up to where you have to price. So make sure that you test and that you iterate a lot. Also be thoughtful and experimental with going to market strategy. In a lot of cases, you don't know what is going to work and what is not going to work. So try a lot of things, and make sure that you measure what you try so that you can decide what works and what doesn't work. And as you decide and see things that work, then focus on that. No? So have the right KPI systems. And lastly, something that people forget when the markets are very bullish is capital efficiency. We've always been very thoughtful about unit economics, and we always like to prioritize unit economics over exponential growth. It's true that when you have a market where you can raise a lot of capital, sometimes you can grow very fast, at the expense of unit economics. But I think there has to be the right balance, and make sure that you don't forget as an entrepreneur that cash is king, and make sure that you understand what your cash is, how much you're burning, and manage the business, especially at the earlier stages, based on cash management, and do not try to fundraise or over optimize, on the amount of capital you raise. When you have the opportunity to raise, and buy yourself at least till 18 months, even though you have to raise at lower terms and you get more dilution, it doesn't matter. You want to make sure that you have slack to be able to work, when things don't work exactly as you plan them. No?
Yeah, no, I appreciate it. Well, I appreciate also on behalf of all founders listening that you sharing this, because indeed, like, no need to repeat mistakes others have made. I'm guessing the capital efficiency is something that has been recently more like upfront, let's say since the 2022 or 2021 boom, right? Like I have the feeling that there's a lot less venture capital going around. So I've heard there's a lot of trouble. So very, very welcome tips. Now, okay, so let's say we have all the ingredients so people know, people know what trends to look at, how to evaluate an idea, how to think about funding. Then how can they get in touch with FJ Labs if they would like to get an investment?
We welcome everybody to reach out. They can send an email to me. They can send an email to deals@fjlabs.com. Everybody is welcome to reach out. And what we can guarantee is that we are very fast and we will look at everything.
All right. Thanks, Jose, for all your time and the lessons and sharing your experience. We'll see each other hopefully at the next Marketplace conference.
Absolutely. Thank you very much, Sjoerd, for having me. And it's a great pleasure. Thank you to the audience as well.
Thank you for listening to Two-Sided, the Marketplace podcast. If you enjoyed this episode, don't forget to subscribe. And if you really liked it, please give us a rating or a review on Spotify, Apple Podcasts, or wherever fine podcasts are downloaded. If you got inspired to build your own marketplace, go visit www.sharetribe.com. It's the fastest way to build a successful online marketplace business.